Hey everyone, welcome into our latest Trade to Black podcast. I'm your host, Shad Dales. Today's podcast, we take a deep dive in the state of Ohio that's about to go live with adult use. So we look at some of the near-term growth catalysts for specific companies within that state and what the overall upside potential is for that state. But most importantly, what's the overall market size, among other things. This is a deep dive into the state of Ohio with adult use ready to go live. So with that, let's welcome in TDR co-host Anthony Varrell. Good to see you. How are things? This should be fun looking at Ohio.
Yeah, it's good. I mean, this is going to be an exciting part of the narrative for the second half of the year, hopefully. There's a lot of MSO exposure in this state. And I mean, it's going to be an exciting thing to follow.
Yep. And as usual, when we dive into these specific markets, our other host is Anthony Coniglio, CEO of NewLake Capital, which trades on the OTC under the ticker symbol NLCP. Good day, sir. How are things?
Things are great. Good to see you guys again. Excited to go through this state.
I know. As we say to many of our investors, let's not look at the short-term stuff that goes on in the market, but we look at pure fundamental stuff. And this is going to be a big one with Ohio. Basically, it's going to be live real soon, which is going to be a big growth opportunity for a lot of key companies within that state. So let's begin, Anthony Coniglio, with the overall market size and projections. The market is rumored to be around $2 billion once fully up and running. So what is the expected growth when it comes to Ohio when you combine both the medicinal and adult use market combined once the is up, like I said, fully up and running and live?
Yeah, as always with these state turn-ons, it's really hard to estimate those numbers. But we're going to give it a try here. And I believe the answer for Ohio lies in the combination of the price point that ends up getting to based on supply demand. We'll get into some of those details, but it also depends on the level of out-of-state sales. You know, if you think about where the state is located, bordering with Indiana, Pennsylvania, and Kentucky, where there's no adult use, I think you're going to get a fair amount of cross-border sales. Maybe we shouldn't say that too loud, but the reality is you do get a fair amount of these cross-border sales occurring when you border these non-adult use states. And to just give a flavor, if you think about Indianapolis, a fairly populous city in Indiana, Indianapolis is only about an hour and 15 minutes from the state border. You have Louisville is about an hour and a half from Cincinnati. And so if the price point for adult use is low enough, I think you could pull a lot of volume out of the states of Indiana and Kentucky. So what does that all mean? I think with the combination of that, we estimate that 2025 will be approximately $1 billion in sales, and in 2027 about $2 billion of sales, and that's
Big
up
market.
from $485 million in 2023. So a near doubling after the first full year, and getting to $2 billion once it's much more mature and once we have many more dispensaries open.
Well, we've talked about this a lot, right, Anthony V? And, it's a big market. We've highlighted some of the companies, but, before we get into specific companies, like how would you compare this market to other states that have recently legalized adult use?
Yeah, I mean, it's got a low penetration rate when it comes to medical. So I mean, I wouldn't be looking at it as a market such as like PA or like Florida that have medical programs with high penetration rates. I mean, I think Anthony nailed it on the head. Illinois had a 30% out of market revenue rate for the first couple of years in existence, and it's very close to the Kentucky and Indianapolis markets, as well as PA that can't really get its stuff together right now in terms of adult use. It's refreshing to hear the numbers coming from Anthony C. From a projection standpoint. I like to use conservative numbers when we're talking about the estimates and the growth rates. And I mean, I think that it's practical for it to have $1 billion run rate after year one and a $2 billion run rate potentially after year two. As it kind of gets out the kinks, it really starts to scale, and you see the operators really start to flourish within the market.
Yeah.
And if I could pull those first two questions, pull the first two questions together, actually, it ties in nicely. We think Illinois is the right comp for Ohio going rec. When you look at the licensing approach, you look at the canopy per capita, you look at the dispensary counts and the patient penetration just prior to adult use, it's really setting up very similarly. So let's look at what happened in Illinois. In Illinois, you had about $600 million, $660 million of sales in the adult use market in year one. And they had fewer dispensaries. In Ohio, you actually have a larger dispensary network. Now, Ohio is a little bit smaller, but since Ohio has more dispensaries, there's a little bit less torque to the launch. And so when you saw going from, say, 260 to 280 in Illinois to then adult use adding another 600,000, I think given that Ohio has more dispensaries open already, that you're going to get less torque out of it. So when some people hear our projections and hear the comparison to Illinois, you saw a much greater percentage increase. But I think because there's so many dispensaries today relative to Illinois' program,
Yeah.
I think you'll get to that $1 billion mark for that first year.
What's the pot?
There's been, or
Go ahead.
ahead, Chad.
No,
I was
go
going to
ahead.
say there's been a lot of conversation around the canopy constraints of some of the operators in Ohio, and I mean it's capped. It's not like some other markets where you can just grow and grow and grow if you want to deploy the capex. How are you looking into that market in terms of canopy constraints? And I mean, do you guys see it as enabled enough right now to cater to a full-blown adult use market in year one?
Yeah, it's actually a great point. When we look at the canopy, the total cap on canopy for the state of Ohio, it comes out on a per capita basis, somewhere around 0.3 per capita. Compare that to Illinois, where it was around 0.45 per capita. So it's a lower canopy per square foot. It's a lower canopy per capita. So what that tells me is that if the demand equation in Ohio on a per capita basis is similar to what you saw in Illinois, including some of those out of state sales, that means you're going to have a supply demand dynamic that's likely to keep prices higher.
Yeah.
And so you actually are setting up for Ohio to be a market that can get functioning, that can actually have a reasonably good margin for the operators that are in it. And it's hard to see the way pricing would drop precipitously in the first year. It's going to take a while for much more canopy to get on and for that market to grow. So actually that canopy limit is a little bit more restrictive than it was in Illinois, and we think sets up for some good margin for the operators, an elevated level. But again, back to my other point, if prices are too high, it's going to be hard to get a lot of those out of state sales. And you may even see some people go, as I've heard you say before, Anthony, go to Michigan, let's say, to get product as opposed to, staying in Ohio.
Yeah, that'll be interesting to see as to how many people will no longer go to Michigan. But any care to comment on that, AC?
I think, again, it comes to that price point, and it comes to, are they able to get the product they want at the price point they want to pay? I just think it's simple math. Is it worth making the trip up there, or is it worth going around to your local dispensary? I think you're still going to see a fair number of people going to Michigan in the early stages until you get greater and greater capacity built out, both on the dispensary side as well as the cultivation side, because not all the cultivation is active today. And that's what it's going to take to bring prices down. And that'll just give another leg up to the growth dynamic. And that probably happens in 26, 27.
Yeah. Well, good comparison to Illinois. It's got 12.58 million people. Ohio has 11.76 million. So there you go. That's state sizes that are pretty much on par with each other. Anthony, we've highlighted this a number of times in our live streams, key companies that are positioned to operate within this state. So who would you say right now are the top 4 companies best positioned for when adult use does indeed go live?
Yeah, and so to answer that,
that's actually a question for AV. Sorry, my apologies. I should outline that.
Yeah, I was thinking about it when you were asking. I was like, wait a minute. I mean, as per Pablo's report, he had the top 4, the Cannabis, Vex, Acreage, and Ascend as the top 4 in terms of market cap torque compared to where they were now on a relative basis. Now, there's some nuance to that. His math was that all 4 of those operators go to the 8 cap on retail in year one, as well as and that puts a 10x EBITDA multiple on the metrics. I mean, we know that it's not exactly these stocks don't trade on fundamentals. I mean, there's not a lot of companies out there that are trading at 10x multiples on EBITDA. So I mean, you can say what you want about the math and the nuance to the equation, but as far as that goes, he's got those four. And from what I do know, Acreage has about a 9.5% market share of the entire Ohio market, which bodes well for them. The other three, I don't have the level of insight into what's going on with them, but he has those four labeled as the most to gain from the adult use scenario kicking online in year one in Ohio.
AC, do you agree with that? You want to elaborate?
No, I think that's right from a torque perspective and what it means to those corporations. There are other MSOs that have big positions in the state, such as a GTI or a Cresco.
Yeah.
What's interesting about Ascend is Ascend having 5 dispensaries, plus they can get an additional 3. Actually, they have a level 2 cultivation, so they're only going to get an additional 1. And the difference between a level 2 cultivation and a level 1 cultivation, level 2 having a 15,000 square foot cap on canopy versus 100,000 square foot, it means who's doing wholesale and who has to go out and buy product in the wholesale market. And so the more dispensaries you have, if you only have a level 2 cultivation, you're going to be more susceptible to pricing in the wholesale market in order to supply your dispensaries. If you have a level 1 cultivation and you have 8 dispensaries, you could feed those dispensaries and have a little bit left over to put out in the wholesale market. But if you have a level 1 cultivation, but you don't have a lot of dispensaries, you're going to be really dependent on selling into that wholesale market. So there's an analysis that has to happen a level below it. But again, go back to the amount of canopy per capita and the number of dispensaries open. I think everybody should really be okay for the first year or two here. I think there should be plenty of demand for product in the wholesale market.
So with that said, AV, like if you looked at social equity, like can you share with us what that landscape looks like and what kind of
Yeah.
impact it'll have? Go ahead.
Yeah. So phase one of the social equity program will be coming online concurrent with the Med to Rec flip. There'll be 50 social equity licenses that are up for grabs. It's very early in that process. I think the application process should be opening here shortly. But I think it's going to be about 25% of the retail that's going to be live in the state of Ohio will be social equity licenses. I think 210 is the fully diluted, not fully diluted, but fully built out cap on the licenses. And then adding in that 50 will be interesting to see how it transforms the market.
Yeah.
I think you're going to see what we saw in New Jersey, really big pop in retail upon inception. And then you start to see those social equity licenses as well as incremental retail degrade the sales quarter over quarter if the businesses aren't picking up market share in the wholesale market as well.
Yeah.
Yeah, and don't forget, there's also 40 level 3 cultivation licenses that they're putting out, which interestingly is very, very similar to Illinois' craft grow licenses that they had targeted towards social equity.
Okay.
And so that's just yet another corollary to this. And those tier 3 grows have a cap, I believe it was 5,000 square feet on canopy. And again, very hard to compete on a price basis with only 5,000 square feet versus somebody that has 100,000 square feet. And so those social equity cultivation licenses will have to have some meaningful product attraction in order to command a premium price to compensate them for the lack of scale.
I was just going to say, and that's actually a pretty interesting nuance to the market, because those craft grows, if you get companies that go in there and have super high quality genetics and premium product, you can find your market niche in there. And I mean, 5,000 square feet, obviously that's not a lot, but if you're double and triple stacking and you have a quality product that can command price, that's a nice little business to be operating versus one of the larger vertical operations that take much more expertise, and it's a much harder business to run. So I mean, that's actually something I'm going to pay close attention to moving forward with how that transpires and what you really see coming out of those craft grows. I wish they would do something like that in Florida.
Well, we're about to find out.
Honest.
We're about to find out whose product is better than the others, because we're in a pretty much even keel playing field when it comes to competitive advantage and dispensary caps. But if you're a company running in this market right now, like how do you get some sort of competitive edge based on the infrastructure that's been built, besides the obvious, which is good product and good price? But you care to elaborate off that, AV?
I mean, it's like how AC basically spelled it out. It's gonna come down to, do you have the capacity and do you have the quality to be supplying the wholesale market? I
Yeah.
mean, if you're capped and constrained at 8 retail locations, the only way to gain market share and gain brand awareness within the state is going to be having your product on other people's shelves. So it's, do those other market participants have a deficit as it relates to keeping product on the shelves, and what is the demand going to be and sell through of your products on their shelves? And do you have the excess capacity to actually be doing that? It's going to be very interesting to see how this market
Hmm.
matures. Um, Going off of other markets, I'd be willing to bet Charlie and the gang at Cresco are probably well equipped to not corner this market, but to operate in this market. As you do see them creating or maintaining number one positions from a brand standpoint, as well as having a healthy wholesale business in other markets such as Illinois and Pennsylvania. So I'm gonna watch this closely and see how it progresses.
But you bring up an interesting point when you mention Pennsylvania. I think a key to how this market develops is going to be if the operators figure out a workaround for the dispensary caps the way they did in Pennsylvania,
Yes.
because Pennsylvania was set up to operate where the independents can have access to independent dispensaries, but organizations figured a workaround, and now you have organizations that have 19 dispensaries, 15 dispensaries, and they really were selling vertical. And so if you have a level one grow in Ohio and you could figure out a way to get yourself to 15, 18 dispensaries,
Oh
perhaps you're
yeah.
only doing all vertical. And so it'll be, I think that's something that we have to watch. Are people able to get around the dispensary cap, or can the state really keep the structures they've designed it true to execution over the next 2 years?
Yeah. So this market, look at the as far as competitive advantage, it's the land of wholesale and what you're going to be able to present. From what I'm gathering, correct?
I think that's part of it. For wholesale, doesn't have to be. If you have a level two and you have three dispensaries, you're probably doing just fine. Maybe you'll have a little bit left over, or perhaps maybe you have a wholesale strategy. But it's hard to have a wholesale strategy with only 15,000 square foot of canopy.
Yeah.
And I think it's nice that we have what I would consider a distributed market. It's nice that nobody is really dominating on the dispensary side. Nobody is dominating with 300,000 square feet of canopy because the cap is really, really high, but there's only one or two companies that have the CapEx ability to get there. And so when I look at the level one licensing, most of those companies will have the ability over time to get to that cap. They should be able to find the CapEx to get to the 100,000 square feet.
Yeah.
And so we should see a nice development of dispensaries opening, production coming online, but not too much production coming online where the pricing crushes the operators and you have a redo of, say, what you saw in Massachusetts 2 years ago.
So
Hmm.
I mean, I don't want to throw a wrench in here, but it kind of just came something just came to mind, and I mean, you probably are one of the better people to ask this question. I mean, as we talk about the maturation of the industry, and we look at markets like California, Oregon, Washington, like, with the structure that's in place on these limited license states, we're talking about caps on cultivation, caps on retail. Some people could say that's not really free and fair markets, and it's kind of anti-capitalistic or anti-capitalism to an extent. Do you ever see these markets just growing out of these structures and it being more so like a free market, like in the future, or do you think it's going to stay regulated, and this is the way the cannabis industry is going to be because it is such a highly regulated and nascent industry?
Yeah, for the foreseeable future, talk 5, 10, 15, 20 years, I think they'll continue to stay very structured. And just look at the approach to alcohol. In most of
Yeah.
these limited license states, they approach alcohol in very much of a limited capacity. But I think when you look at the unlimited states versus the more limited license states, and it certainly no observation is absolute, this is a generalization, but I think most people would agree that the limited license states have generally had a better rollout. It's been a
Yeah.
more reasonable approach for the consumer in
Yeah.
terms of consistency and quality and price point. versus say what you saw in California, up and down, or Colorado, up and down, up and down. I think the regulators like to have a little bit more of that controlled growth and the ability to put their hand on it. And you just also look at Oklahoma. It's been kind of a disaster in Oklahoma for many, many reasons. And so I think regulators look at Illinois, they look at Missouri as an example. And I think they're going to end up looking at Ohio, and they're going to say, you can have a reasonable approach to regulation that brings down pricing over time and expands access to consumers. So price and access are probably two of the most important regulatory objectives of any of these state regulators. And so I'm a fan of the limited license jurisdictions, not from an investment perspective only, but also because I think they set up good quality markets that can survive and that can thrive over time and deliver for the consumers.
So you like the long-term health? Go ahead.
I was going to say, from an investment perspective, like, what is NewLake's current exposure to the Ohio market? And I mean, how are you looking at this market from an investment perspective after adult use finally flips?
Yeah, we very much like Ohio, as you've heard me say. We think this market's going to continue to grow. We think there's meaningful growth there. We think the dynamics are in place. And while we always model that pricing is going to come down over time in all the deals we do, because it's just what happens.
It's reality.
It will happen in Ohio, but you have less risk of it happening as abruptly as you've seen in some of the other states for all the dynamics that we've said. And so we do have a couple of properties in Ohio. We have many of our tenants where we have properties in other states. Many of our tenants have exposure to Ohio. And so we're excited for them to realize the economic benefits of being there and the investments that they've made. And then as this industry scales into the opportunity, we think there's future opportunity for us to invest into it.
So you like the long-term health of this market?
For sure. It's a fairly populous state. And that limited license approach, I think, really sets it up for
great location too.
Yeah, good location. Indiana and Kentucky don't look like they're going to be doing anything anytime soon. Now, you do have to worry about some of the hemp-derived THC products that are growing in popularity. And does that it's a separate conversation. Did I just blow out your earbuds, Anthony?
Oh, man.
But that is going to play here. If you have that growing category in Kentucky, you're going to get fewer people coming across the border into Ohio to purchase or in Indiana.
You want good legal product, or you want black market Chinese hemp seeds? I think the reality is like, as we're seeing a maturing of an actual industry, this is what I said earlier. It's to have a competitive advantage, you're going to have to get good at your product, at what you do. You care to elaborate off that, AV? I see you smiling.
I'm good. I'm with Anthony, and I mean, I'm not against hemp products. I'm for safe, tested, regulated THC products, whether they are hemp derived, whether they are cannabis derived. I mean, they need to be regulated, safe, and tested. And right now, the companies that are circumventing regulation and that are leveraging the loopholes in the Farm Bill, for the most part, are not acting in compliance with the law. That's that. I'm not against hemp products. I'm against guys that are selling God knows what from a derivative perspective in a gas station that could get in the hands of a 16-year-old, or the guys that have the beverage companies that are drop shipping cannabis beverages nationwide with absolutely no age gating whatsoever. Like, that is an existential threat to the traditional industry in the hands of the wrong people. That's why I have the stance that I have on the hemp industry.
Well said.
Yeah, and I posted on Twitter yesterday. I can't believe that some of our politicians are allowing this to happen. It's just bad public policy. I mean, I'm a father of three. I normally don't talk about my personal life, but it's really important to me to make sure that anything like cannabis or alcohol or tobacco is very age restricted, and anything that's available is tested and is reliable and is extremely safe. And it's amazing to me to see some of our legislators allowing the opposite to occur. It's really distressing.
Well, when we were in Washington, when I asked Don Murphy, when are we going to see change? And they said, when a lot of these politicians are personally affected themselves. And who knows, what happens, but, it's a very good point. These are elected officials, and you'd think, especially coming from our government, we'd be doing this legally, and it's pretty eye-opening to say the least. But that's, like I said, I keep saying it's a different conversation, but we're already in this conversation. But let's continue to focus on Ohio. Let's look at financial performance and
Yes.
projections. So AC, this is something just about as good as anyone in the industry, I should say. So you outlined earlier the projected revenue that this state will generate. Have you looked at profit margins for businesses that'll be operating in this market?
Yeah, for sure. When we look at this market, we don't see anything different about this market than other markets that would suggest that we should have an expectation that margins in Ohio will be very different than margins that a particular operator has somewhere else. And so if somebody's operating in another state at a 48% gross margin, they should have similar gross margins here. There's nothing specific to Ohio around labor costs or energy costs or production costs that would tell me that we should have a different expectation.
Well, a lot of interesting stuff to take away here. I think the biggest thing I want to ask towards the end here is like, let's look. We always think of this trend about how the big MSOs are going to start to gobble up some of the smaller players. But if we start to see, there's a lot of MSOs that are well positioned within this state right now. But as far as mergers and acquisitions, and I'll start with you, AV, do you see that happening within this state? And if so, how soon do you see it happening?
I don't see M&A being that hot in this state, as the dispensaries are capped per license, and from my understanding, they can't be holding multiple licenses as it relates to level one and the likes of it. But I mean, I could see TerraSend purchasing an asset within this state. Trulieve, I know, just settled the Harvest lawsuit. From my understanding, they have one retail location and will need to expand into more. Probably buy, not build. In Kim's equation going into adult use, and I mean, not necessarily M&A happening within or consolidation happening within the state. 34% of the current retail locations are owned by MSOs, so there is a quite large contingent in the state outside of the MSOs foothold. But I think it's going to be a wait and see approach. I mean, a lot of the MSOs are seated within that state, fortified with positions, and consolidation. I don't think you'll see that much in year one.
Yeah. Be interesting to see what happens to Florida, I think, in the fall. But in the event, let's say, adult use does not pass, how aggressive do you think a lot of these companies that aren't in the Ohio market want to jump in? What do you see happening, AEC?
I think people have their plans for Ohio regardless of what happens in November in Florida. Maybe there's a little bit of CapEx that's being held to the side to not completely build out of cultivation capacity because maybe you need it for your Florida operation. But I think by and large, you have your strategy for Ohio and you're going to pursue it unless you're somewhat capital constrained and you're waiting to see what happens in Florida. And then in that situation, maybe you'll allocate some to Florida and some to Ohio. But absent that, I think people have their plans and they'll execute.
Yeah. Well, this is about to go live. Some people think it's, definitely within the next week. It could be by the end of June, but regardless, it's nice to see fundamentally that businesses will continue to flourish. We'll see this on the balance sheet and the quarterly earnings, but the Cannabis, Ascend, Acreage, Vex Science, those are your top four among other MSOs. So all upwards and onwards for the industry, which is great to see, right, guys?
Yeah, this will be good to get out there.
For sure.
All right, leave some comments below.
I was just going to say, we need these growth states. We need these catalysts for the growth states. It's great for the organizations to have continued growth. It's great for the industry overall to have to be able to show and demonstrate to the broader population that the industry continues to grow. There continues to be adoption, particularly in these red-oriented states like Ohio, like Missouri.
Well said. All right, Anthony's. I appreciate you checking in here today, and hopefully everybody got some good feedback regarding the state of Ohio. So leave some feedback. Let us know what you thought of our take on this state. Do you agree with the top four, that some of the companies that we outlined? And most importantly, what are the things that you're looking for? Any questions? Leave some comments below, and we'll let you know what we think, and we'll get back to you right away. Gentlemen, enjoy the rest of your afternoon, and appreciate you checking in here today.
Talk soon.
Thanks, guys. Bye-bye.
Hey everyone, thanks again for watching. Hey, we're humming along, and it's all because of you and the audience and community that we're building. So again, make sure to smash on that like button and leave lots of comments. Who do we have up next? You let us know. Who should we interview? What companies? Is there anything you like? Is there anything we're missing? We're all here for you. Let's get on with each other and build this community for all of us to benefit. As usual, don't forget to subscribe to our channel, because in the end, we wouldn't be here without you. Thanks again, everyone.